Well, I think strategically among his people, among the folks who wrote the national security strategy, yes, I think the public stance has been we see China as a strategic competitor. The word that really drives the Chinese nuts is the strategic part. So that's been the message so far. On the G20, you know, there are two options here. One is that they have a nice photo op, a handshake, and an agreement to negotiate in the future with not any substance. The other would be, and I think this is lower probability, would be a truce, a ceasefire, until they're able to negotiate certain things. The problem with that is I don't think President Trump wants to give up his leverage. And he's got, let's call it 3 points of leverage. One is, in January, he can take the tariffs up from 10% to 25%. He has to decide on whether we go and put tariffs on another $267 billion of imports. And then what products? And I don't believe that the president wants to give that leverage up. So I would keep expectations low, especially in the market.
Carlos, I want to go back to a point you just made, and that's the focus on this word strategic. Why would China have an issue with that word, especially when you see things like the Made in China 2025 initiative, sort of their stance over the last couple of decades as an emerging country, which many have argued against in the WTO, et cetera?
Well, I think they see the word strategic as meaning that for us, the U.S., that China is an existential issue. They're fine in being a competitor, but a strategic competitor is almost the opposite of an ally. So yes, they were taken aback by that because we had never framed it in that way.
We were just talking about the fact that the Chinese stock market has seen a little bit of a relative pickup in the last couple of weeks compared to the last year or so. Where do you stand in terms of who's feeling the most pain from this trade war? Because clearly the U.S. stock market itself has pulled back of late, albeit is significantly up since the president was elected.
Yeah, you know what the irony here is? Exports from China continue to be pretty strong. Technology firms will be impacted. We saw that Tsinghua was impacted 2 days ago with an export ban. That's on top of ZTE when we find them. But what's really interesting is the president is in a bit of a dilemma here, because as we speak, the trade deficit with China is growing. Why? Because our economy is strong. The last time our trade deficit declined was during the Great Recession. Why? Because our economy was weak. We had less commercial activity. So how he's able to fulfill his promise of reducing the deficit is going to be tough. So I think what you see is the Chinese companies continue to export. They're continuing to report earnings. But it's going to be down to really how much we do to impact Chinese companies even more. That's why I think the president will want to move forward. I really believe that this idea of a ceasefire goes against his gut.